So guys, the market has absolutely exploded and now it is time to bring out the bull market strategies. In this video, I'm going to be showing you a 4-step method on how to 7 to 10x your accounts, how to make $5,000 to $10,000 from just $50. Now, all of you have been asking, Sheldon, when is the leverage course coming? Today is the day. You're finally getting your leverage course and just a hint of what is coming to Sniper School. I hope you're ready. Let's go. So guys, I am so excited to bring you these strategies. But just before we get into them, you gotta know that cohort 7 starts for Sniper School on the 24th of this month and spots are running out. Plus guys, you know it's been free. If you click on the registration button, there's 3 basic steps. There's a free system. This might change after this cohort, so make sure that you sign up and you come join me in class. Reason being is, I'm about to show you a strategy that's gonna blow your mind. It's personally the strategy that changed my whole journey and finally got me to make real money. Therefore, after that, I started expanding my account very quickly. But in order to understand this, you need to know the basics. Sniper School is gonna teach you all these little indicators, all these little patterns, all these little things that I'm about to show you and bring it all together. But if you don't know the basics, you're gonna struggle to actually implement this on your journey. So join Sniper School, come join me in class, and now it is time for me to show you this powerful strategy. Alrighty guys, it is now time to get into the strategies. Therefore, we need to step into the Sniper studio. Sniper! Okay guys, so a big thing you've got to understand about the strategy is it's actually a very powerful strategy with a very little bit amount of money. And I would say the starting price of this amount is $50 and I'd say the max is $100. I don't care if you've got $100,000 in the bank. You start off with this because when you learn to use this little skill, it becomes so powerful at any moment in your journey on how to influx your portfolio and how to boost it really quickly, especially when the market goes bullish as what we are seeing right now. And the fact that we are starting to break trends on the weekly, this means that this can be 3 months, 6 months, 9 months. And ultimately, you can implement this strategy many times along the journey. So the way it starts off with understanding leverage. It starts with the understanding that you are able to borrow money from an exchange. Very simple. So if you have $50, okay, and ultimately you go on a 10x, it means you borrow 10 times the amount of money that you have. So ultimately, you're playing with $50, but you actually have a position size, which is $500. Okay, very simple maths. Now, what happens with that? It means that if the trade goes in your favor, you make money on the $500. If it goes against you, you lose money on the $500. So ultimately, you're at higher risk if it goes against you, and you make a lot of money if it goes with you. This is why we use very small amounts. But what I'm gonna show you now, I'm gonna show you how you build 3 trades inside of 1 trade. Okay, we all sit and we think the more times we trade, the better. No, if you can start building trades inside of trades and you can start prepping for the bigger moves, you will start to see that it takes a few days of hard work and a few weeks of sitting back, relaxing and making a lot of money. And that's what I want to teach you guys. You need to make this simple and stop thinking that you have to stare at the charts every single day to be rich. No, you don't. You got to work hard for a certain period of time and then you got to sit back and relax and allow the money to flow into the account. So guys, as you can see on the screen, you can currently see I have 2 major patterns. And why I'm bringing this up now is because in order to learn the skill, you got to know when to build positions and when to make money. Very simple. A lot of people get this wrong. They try to make money when the market's already moving. I teach them make money or build your positions when the market has settled and it's going sideways. You know, when it's boring and you don't want to watch shows, you don't have motivation. That is the time when you build trades. Therefore, you will see that we've been speaking the last few days about Solana. It's going sideways, it's breaking trend, not much happening, and all of a sudden it exploded and now you want to get in. Let me show you the mental game behind this and how to focus on actually getting this really right. So if you see here, I have 2 basic patterns. Okay, I have continuation patterns and I have reversal patterns. And what I want to teach you is these are 2 different tools that you use in 2 different places. Okay, the first one I want to show you is reversal patterns. And this is the one on the right. This is where you want to start your trade. You know, when the markets come down really hard and then it goes sideways Ultimately, after that, you could always have a reversal at any moment and you want to be in from the beginning. So what I teach you is I want to show you that you always want to start a trade on a reversal pattern. And here's a few basic ones. You know, when you have a big dump, we go sideways and you break that major high, that little resistance, all of a sudden the market flies very quickly. And you're going to see this many times. It's called a Bar-Simpson, an upside down Bart or a top Bart, where ultimately you go from the bottom, you've just had a big pump, and then it goes sideways, it slows down, and then it breaks the bottom line, and it goes very fast to the downside. And that's what I want you guys to focus on, is you want to start your trade when you've had a big move on one side, you're waiting for the reversal pattern to show itself, and you want to catch the trade early when it does reverse. Because as fast as something goes up, is as quick as it comes down the other side, especially when it reverses at a very critical area. And then what you have here is you got the wedges too. Price comes down, goes slowly down at an angle, breaks that resistance, and it flies. And the same way if it's pumped. It goes up, goes a little bit to the upside at an angle, breaks the resistance, and comes down really fast. This is my starting trade tools. Then what you have is continuation patterns. And the way I like to talk about this is it's my adding to trades, adding to my trades. So what it basically means is you want to start your trades on these patterns and you want to add to your trades within these patterns. So when you've just bought this one as an example, where it's just broken out of this wedge over here, you start to go in the money and then it forms a bull flag. You see this, where it goes up and it starts to go sideways and we break the bull flag to the top. You want to take the profits that you've just made and you can add it to your position to make it bigger. Now guys, why am I saying this? I'm going to go back to Sniper School and I want to show you how it's not just the TA, it's not just the trading, it's the understanding of why you're building these positions and when are you going to make your account bigger? Like, what are you trying to do? You need to know what you are doing with your money. When are you going to make it bigger? When are you going to stop? And that's why I want to bring it straight back to the way I teach you in Sniper School. Now guys, remember, you get this on the live sessions. When we do the live sessions for Sniper School, I teach this stuff, but I want to bring this up again. What I show you very much is when you want to make money or you want to create a portfolio, it needs a purpose. And this again shows you the purpose that I want to make money to buy a car. And the only money that I have right now is $1,000. But the car that I want is $25,000. So what must I do? End of the day, I want to make my $1,000 $25,000. So I'm going to start a car business. In order to start a car business, what do you need to do? You need to have a roadmap. Because a lot of people look and they say, okay, if I got to take $1,000 to $25,000, I got to make 2,500%. That's crazy. That means I need Bitcoin to go to $1 million. No, let me show you the simple way. You got to break it down into steps. The first step is get your 1,000 to 2,000. Second step, 2,000 to 4,000. 4,000 to 8,000, 8,000, 16,000, and to 25,000 after that. Therefore, you actually only need 5 steps. And what I'm doing is I'm removing all the other steps and I want you to focus on one step at a time. But now I want to go more advanced. I want to show you the next power where we can actually do 3 steps in one single trade. And this is the powerful thing. So I'm going to jump back now to my charts and I want to show you the power of what I am meaning. So if you have a look over here, I just showed you the patterns, right? And this is a perfect example. And then I'm going to show you how it plays out on the actual chart. So if you have a look over here, what you have is you have a reversal pattern. Price came down hard. It then went sideways. And what did it start to do? It started to form one of those reversal patterns. And I'll bring this back up and I'll show you it started to form this pattern over here, which means there's 2 options. Either it is going to be a reversal or it's going to be a continuation. Price has just come down, it's going sideways. Whichever line I break is the direction it's going to move. If it breaks the bottom line, it's a continuation pattern. If it breaks the top line, it's a reversal pattern. Therefore, I am prepared. If it's a reversal pattern, I want to start my actual trade. So going back over here, when I saw price go down, go sideways, and it breaks this point over here, it's my starting point to take the trade. It's now the point, okay, I'm going to start building my trade. Now what I want to explain to you guys is, I want you to get this into your head that this is a small money starter that builds into a big money business, okay? So I'm talking $50 as an example. $50, okay? Now, if you had to start $50 on a 10x leverage, okay, on a 10x leverage, what that basically means is you're playing with $500 now, and you start your trade over here. What will happen is you will start to go up, you'll start to make the money. Then what you'll start to see is we start to slow down. So again, you're gonna jump back to this and you'll be like, okay, which pattern is it? I'm starting to slow down. So it's either gonna be a continuation pattern or it's gonna be a reversal pattern. Very simple, okay? How do I know which one it is? Whichever line that I break. So if I break the top line, it's a continuation pattern. If I break the bottom line, it's a reversal pattern. Very simple. So now that you've made the money and it goes sideways, you start preparing. You start putting your stop losses below over here because you know if we break the bottom line, we're gonna reverse, okay? And you're also preparing though that if it breaks the top line, ooh, we're gonna go up more. So what I like to do this is I like to call this an adding leg. So what I will do is I'll take my profits that I've just made on this little push up over here and I'll actually add it to the trade. I'll add it to the trade over here. And what that will do is it will make my position size bigger. So ultimately what I'm doing is I'm sacrificing short-term profits for a bigger position size to get a bigger profit later on. So I like to use it as a 3-step method. I have my starting point. I then go in and I have an adding leg. After that, we break up. We start to go sideways again. Same thing. You jump in over there and you're like, which one is it? Is it a continuation? Is it a reversal? Whichever line we break. And all of a sudden, it breaks the top line, as in this pattern over here. It's another continuation pattern. So ultimately, I like to look at this as my next adding leg. Now guys, with this strategy that I'm about to just explain to you now, you can decide how many of these levels there are. But at some point, you do have to cap it because you got to eventually take profits at some point. So the way I do it is I have a starting trade, I have an adding leg, I have a second adding leg, and then I have the final leg of where I take profits. So I always use 2 legs to make my position bigger, and then I need the last small move at the end to take my actual profits. Okay, so you can see how I strategize it. So when we broke this point over here, it was, okay, cool. My second leg has broken. I'm taking the profits that I've made and I'm adding it to the trade. Therefore, when it breaks out here, I know this is my final leg. I'll have my final take profit point. And when it goes up and starts to go sideways is when I start to pull and take my full profit. So why this is so powerful is because you have 2 options here. You could have used each leg to build each step of your actual trade over here, right? You could have used the first one, the second one, the third one. The only difference though is you would have had to have been glued to the screen firstly, and ultimately the more trades that you take, the higher risk you're actually getting. Because every time you got to reopen a trade and you have to put a stop loss that's in risk. How about you use your profits to add to the trade and you keep your stop loss above your entry price? So what I mean by that is let's explain it quickly. When you entered this trade over here, right? Let's actually put a little line and let's make it a nice little green line. And this green line is going to be your entry price. Let me explain to you how trading actually works. So when you entered the trade, you would ultimately have entered over here. That would have been your entry price. Then your stop loss would have been below this low. So let's actually put that in. Let's put that in quickly because it's very important to understand. I'm going to make this a nice big red line, which is your stop loss. Okay? So when you took this trade, you would have bought the breakout over here and you would have put your stop loss under the previous low. Very simple. Then what would have happened is your trade would have went into profit. It would have made a flag and it would have broke the flag at the end of the day over here. Then what I would have done is this profit, I would have bought in more of my position. Now what you got to understand is your first buy was here. Now you are buying a little bit more higher, which means it's going to start taking your entry price a little bit higher because you're buying up higher. But what are you doing? You're making your position size bigger. Okay. And then what you got to understand is every flag that we break means that we should not be coming back in. So every time you pass a leg, you're actually taking your stop loss and you're now moving it above your entry price. So I always eliminate my risk from day one. As soon as the first leg goes, remove the risk. Then I add my profits and I get my entry price higher, therefore making my position size bigger. Don't worry, I'm going to show this on an actual chart now and an actual trade. Okay. Then what happens is price goes up. I make more profits. So what do? I decide to take those profits as soon as we break the top leg and I add those profits in. So after that, what actually happens is my entry price starts to go a little bit up. Why? Because I'm buying more at a higher point, but I'm making my position size bigger. So my entry price will start going up and I move my stop loss just above. So what I'm actually doing is instead of me taking 3 individual trades, I'm actually adding the profits into this trade for the last leg on the upside to profit that way. So going back now, let me show you how this works on the actual chart. So if I show you this over here, there we go. So I want to show you the steps. So if you have a look over here, what you started to form with Matic, and this is the perfect example, we had a huge dump. Therefore, I'm paying attention to a reversal pattern. And what we started doing is we started to have this trend over here and we started to have a wedge form and price started to slow down, which means I was getting ready to get my entry. What happened? Price broke trend. Therefore, for me, what did that mean? Trigger my first trade. Remember, the reversal pattern is where you open your trade. So what I did is I took $50 and I put it on 10x. So it gave me a position size of $500. Then what happened after that is price went up, it started to go sideways, and it made a continuation pattern. And you could see over here, as soon as we broke the trend line, it went again. But let's pay attention here first. So what I did was, my price, all of a sudden, I went into 8% profit. How do I know it's 8% profit? Because where this trend line broke over here to where my entry price is 8%. So it indicates where I would want to add to my position is the break of trend. And that was 8%. Okay, so what that meant was my 8% of that $500 would have given me $40 profit. So I can bank that $40 if I want. Therefore means I need to start a new trade. But no, what I decide to do is I decide to add it. So you'll see when you're in your actual exchange, you'll jump in and you will see that you have your available amounts over here and you'll have your entry price. And when you enter your trade, if it starts going into profit, it starts to add the profit and make it available here, which means you're able to add it to your actual position and you're able to make your entry size or your position size bigger. So going back over here, I'll show you that when this goes in over here, that $40 I can add to my trade. Now, what does that do? Meaning that if I take that 50 and I add my 40, I'm actually got $90 in the game now. And therefore, my $90 times 10x, now my position size is $900. So I had a $500 position account. Now I have a $900 position account because I just added my $40. Then what happens? Price goes up again. Wait. Sniper, you missed a step. What's the step? Stop loss. Move stop loss up. Move the stop loss up. So, for example, if you entered here and you entered more here, your entry price would go up. It would definitely go up, okay? And then what you want to do is you want to move your stop loss too. So when you got the initial entry, your stop loss was at the low. We started to make a higher low and break trend. So you take your stop loss and you move it. Now you can see your stop loss is very near your entry price, still keeping the risk minimal, okay? We then break out, we go up 5%. This is how I worked it out, because we went up, you formed another continuation pattern, and we broke the trend. Again, meaning it's my step 2, this is where I add to my position again, okay? And ultimately what would happen from there is you would basically see that, okay, I need to add for my final leg to take profits. Step 2. So that break over there to there is 5%. So what that means is that 5% is now of my $900 portfolio, okay? Therefore, it would give me $45 profit. So by the time I break this, I'm in $45 profit. Now I have an option. Do I take that profit and bank my first $40 plus the 45, which is nearly 3xing my account, by the way, which is really good. Or I can add it to the trade for the final leg. Then what happens is I say, okay, I want to add it. What does that mean now? It means now my $45 plus my $90 actually means that I have $135, which is on a 10x. So now it means my position size is $1,350. Then what happens? I say, okay, cool. I am now busy with my last move to the upside. Now guys, what I teach you in Sniper School, and I want to bring it back to this quickly, is firstly, stop losses, very important. I teach you this and I teach you risk to reward and take profit points. Because now you're going to ask me, okay, we're about to go into the final step, which take profits, like where do I take profits? It's all there, guys. Plus, I show you the patterns and the indicators individually that you're going to use to help you take profits on where's the exact level. This is something as in a support and resistance. You always take profit at resistance. This is something as stochastic RSI. This is even Fibonacci that you use as levels. And remember, if you go down over here, I show you these strategies which give you proper systems on how to have a 4-step system. So what I show you is I show you how you have a 4-step method to take profits. Because you can see we're very much in an uptrend, right? Uptrend on whatever time frame you're in. Look how I say, okay, if you want to sell, these are the 4 things you look at to sell. Are you at this level on the Fibonacci? Do you have a horizontal resistance? Is your RSI at the top? And have you broken a support trend line to the downside? There you take profits. So this will all help you on where exactly that area actually is on the chart. So let's go back. So ultimately what I would have marked out is I marked out that this was ultimately, I started my trading here, but I wanted price to get here. But what I decided to do is, why don't I take 3 trades inside of 1 trade? Instead of me taking 1 trade and going all the way up to that area. Because if I can compound and I can make my position size bigger within 1 trade, it will 3x my result than if I just took my $50 and I just put it on a 10x at this area to the upside. And what that resulted in is it resulted in me now having a $1,350 position. We broke the last trend line and we started to accelerate directly to where I wanted my TP. And what does this mean now? It means that I made 25% on that last move. I made 25%, which is a $1,350 position size, which ended up making me $337 profit. Therefore, I'm now sitting on my new total of $387 profit, starting from my $50, which means I'm very near the area of 700 to 750% within 1 step. So what I want to show you is if we go back over here, and we go back to the original thought of like, okay, I need to create these steps. If your step was 50, 100, 200, 400, okay? In this single trade that you made now, you would have went from step 1 to step 4 within 1 trade, but by taking 3 trades inside of it. So end of the day, what did I teach you? I basically taught you that you are able to start taking trades within trades. And you know what's powerful about this is you start off on a high time frame. If you go to the daily or the weekly and you can see the stochastic has just crossed up on a coin, it means that over the next few weeks, that coin can go up. Therefore, this strategy is perfect because you can jump to the 4-hour chart and you can start adding to your position because you know higher time frame, this is a bigger move. So if I can rather focus on building my position in the lower range for when that big move comes and my position is in, then I can actually make huge profits, right? And why I'm saying this is because what would you say in your head right now? You have $50 right now, okay? And you buy Ethereum, $2,000, and Ethereum goes to $20,000. What does your $50 become? $1,000? Okay? But then you're going to be upset with yourself and be like, why didn't I have more money in the game? Why did I not have a bigger position? What happens if you had $1,000 in Ethereum at that time? And you see how I use the exchange's money. I never put more money into this. I used their money, and why I used their money was because every time I got the continuation pattern, I was entering the trades and using the profits. But what I was also doing was I was moving my stop losses up. And ultimately, my stop loss was above my entry price, putting me at no risk at all, which was really good. So firstly, I used their money. I focused really hard on minimizing my risk. I used on building my position size, and I got to a point where my average price was way below my stop loss. And ultimately, this stop loss would have been trailed up and my entry price would have been all the way down here. And you see that I took advantage of making 700% on the trade in the same time. So I teach you that you can build positions and you can put money, profits back into the trades to build the bigger trade. And this is going to become so powerful when the market starts to really move in a direction for the next 9 to 12 months. We could be going full bull, guys. We could literally be going full bull because you're having altcoins break weekly trends. This could be the next few months to the upside. And if you do this in 1 week, And then you do this in the next week because you're going to have breaks in between. A trader always slows down when they win. When they win and they got this trade right, they breathe. They sit back, they take another week until what? They see a big drop, they see sideways, they see reversal pattern. Now they go. Good traders wait for their trades. Wait for the reversal. Wait for the continuation. Wait for these things. And what I mean by waiting is putting an alarm on your trend line. It doesn't mean sitting there and staring at your charts. That's basically you putting an alarm in there to be like, if it triggers here, alert me so that I can go add to my positions. Now guys, I want to blow your mind even more. Firstly, this is a game-changing strategy, but I do want to make the risks. What the risk is you need to trade on cross, okay? So if you go to your leveraged account, you need to go on cross. So if you go over here, you go on cross. Now, what this means is it means that it can access any money that's in this account. And if the trade goes against you, any money you have there is at risk of going to zero. That's liquidation, okay? The second risk of it is if you open multiple coins, if you have 3, 4, 5 trades running, and only one does really bad, it can hurt all 4 of the other one, if not wipe them out completely. So this strategy is very much a one token strategy. It's a one token and you're using it on cross. Why do you use cross? Because they make it available that you can use your profits to add to your trades. If you're on isolated, you can't add to your trades. It basically says you've decided to put this amount in, we've borrowed you the money, but we're not allowing you to add to them. And that's the thing with understanding. So cross is very powerful. One token. Secondly, a very small amount of money. Very small amount. Because if you just saw the first step now where it's 50 to 300, the next one is 300 to 2,000. The next one is 2,000 to 10,000. And now it comes down to the second part of this video. The second part of this video that's coming up now is gonna be the next piece where I show you can start upping your leverage. Okay, so the big problem with the first strategy is that it's amazing, yes, but ultimately the problem is you still have to start the trade-off on a high-ish leverage, or you got to start on a 5 or 10x. By the way, guys, if you want to trade no leverage at all, use a 1x. If you use a 1x here, you can add your profits in. So you don't have to put risk, guys. You guys decide on how risk averse you want to be. Okay, but the only difference is over here is you have to start off with some sort of leverage, okay, at some point, like the way that I'm teaching it over here. And I want to show you another powerful strategy. And this strategy is the one that's going to blow your mind. Now, guys, I want to bring this back before I jump into the next strategy, or the part 2 of this video, is I want to remind you that I don't think we have more than 12 to 18 months left within leverage. I really don't. I think regulation's coming, and I think it's going to be really hard to access leverage. So therefore, this is such a big tool for me because I never had money in the beginning. And yes, it was tough when I put in like too much money and did get very risky and liquidations and things like that. But at the end of the day, if I never had this tool that I could restart with a little bit of amount of money, I would never have gotten where I was. So it's quite sad for me to know that this may not be here within the future. And that's why I want you guys to understand that these tools and these strategies and opportunities that you're getting put in front of you right now, there's a limited time to it. They're gonna run out. And when they run out, you're just gonna be trading spot. And that's fine, that's really fine. But in that time, let's make sure if you only have a couple of $100, let's get you to $10,000, $20,000, $30,000 first. Once you're at those levels, you can become a spot trader. It's very hard to be a spot long-term trader if you only got $50. But if you got a good count size, you can act for the next 10, 20 years within the market, you can grow. So I want to really focus on, you don't have to put a lot of money in this game. Like I say, I don't care if you got a lot of money in your account right now, put in $50 here and build this up. Get this up to the major levels and use this tool for as long as it is still here. And that's the same thing we speak about Sniper School. It is free now and you need to join this cohort. But we do rely very much on exchange revenue. We rely on these things. And if regulation comes, it might shift that. So the structure for Sniper School after cohort 7 might possibly change. So therefore, we are starting in the next 2 to 3 weeks. And this is your time to come and join Sniper School, especially as this market is waking up right now. We've seen Solana do 50%. We saw XRP double overnight. This is when you want to put this all into play. Remember, with Sniper School, you also get the live trading sessions where you have the people there every week trading with you, helping you with the stuff, doing the stuff with you. And that's why you want to be part of it. Go below, click the registration button and come join me. Really get your portfolio to a certain level where you no longer need to have risk anymore. You can just trade spots, you can trade high time frames. We just got to get you to a point where you've made a lot of money. So remember, click the button below, join Sniper School, and get ready for part 2.